Yes, we'll have a quick recap of what your joint arrangement is going to speak about. See, joint arrangement primarily says that, 1 minute, joint arrangement says that there should be two conditions. One, you need to have contractual arrangement, and you need to have one unanimous decision over relevant activity, the most important activity which will earn you the cash. If you take the unanimous decisions for that relevant activity, then we will classify it as a joint arrangement. Now, joint arrangement, how to account a joint arrangement? Now, joint arrangement may take different forms there. That's why we have to classify into joint operation or joint venture. The standard says very clearly, if it is a joint operation, then accounting is actually simple. They say that you account whatever you have contributed as your own assets. Don't treat it as a different asset. Your asset, your share of asset. Your liability, your share of liability. Your income, your share of income. Your expenses, your share of expenses. You treat it as if you have spent. If you want to give any different nomenclature, say joint operation cash, joint operation thing, if you want, don't recognize profit for your own portion. It is like you are dealing with other party. The net effect is other party receivable, other party payable. That's the net effect. If it's a joint venture, it is a net asset basis accounting. That means Ind AS 28 is going to come into picture. This is the crux and the concept of joint arrangement. That's it. Now we have solved some problems on joint operations. Now we will move on to, after this we will move on to Ind AS 28 and see how we are going to account it. From there we will start on the control part. Now some theories were left. We will just discuss about those theories. Probable theories. You can always quickly go through. Entity R and S established a new entity called RS, a construction of a national highway, and operate the same for a period of 30 years as per the contract given by the government authorities. Now, what is this RS? Is it a joint venture? It is a subsidiary layer. R is the parent, R is the subsidiary of R, and S is the minority interest. We don't know at this point of time. It can be any combination. Okay. As per the articles of association of RS, the construction of the highway will be done by entity R. See how the terms and conditions speak about. And all the decisions for the construction will be taken by entity R independently. What they are telling us a real story that somebody must have done like this. After the construction is over, entity S is going to operate the highway for a period of 30 years. Maybe, see, what type of thing must have happened? There is one construction company, there is one maintenance guy. See, construction company never involved into maintenance. Maintenance never ventured into construction. Now, maybe they become relatives. Their kids got married or something must have happened. They decided, why not we let us joint venture? Because both of us have got a contact and both of us have got this, what is that called, skills. Now, they start one RS. Now, RS, when it is started, now we have to understand the structure. Maybe their equity holding may be 60-40. But we can't say that, oh, RS is a subsidiary of R. The accounting has got changed now. Now you understood how the arrangement happened. And all the decisions of the operating highway will be taken by the S independently. So, construction they will take care. Your maintenance, they will take care. However, funding and the capital structure, both during the construction and during your operation, will be unanimous. Now determine whether it is a joint arrangement or not. That's it. They didn't ask you joint operation, joint venture. First they are asking, is it a joint arrangement or it is not a joint arrangement? Whether it is a subsidiary, associate, that they are not asking, leave it. Simply they are asking, is it a joint arrangement? On what basis you say? During construction phase, what it is? There is one company, no? Did they form two different companies? One only for construction, one only for. If they would have passed two company called RS Constructions, RS Maintenance, what this RS Construction would be? It would have been a subsidiary of R, where S is a minority interest or NCI. If in RSM it is a subsidiary of S and R would be in NCI, non-controlling interest. But they have one company, no, which is going to live for 30 years from now or 35 years from now. 5 years for construction, 30 years for maintenance. Now what it is? Is it a joint arrangement? Where is the unanimous decision? On what basis do you say joint arrangement? Yes, students, I want you to discuss. Okay, participate. Think, whatever, it doesn't matter. What did you understood with this? You have to open up your mind here. Whatever you have learned, whatever you observe. You have to question, challenge, discuss. Huh? Yeah, exactly. Yeah, I agree with you. Your conclusion is perfect. But how do you convince? On what basis do you say? See, one is writing in an English language and telling to that guy. For this, you need a practice now. At this point of time, I am not expecting that. I am expecting one conceptual discussion. Yes, your conclusion is correct. But on what basis do you say? Okay. Okay, it is dependent. But see, but during construction, he can take independent decision, no? He can inflate the construction cost. Okay, so on what, okay, what is that main element on which you conclude that it is your, what is that called? It's the joint arrangement. Construction phase or this thing or capital structure? Cap structure. If you see this, funding and the capital structure is one of the main thing. How do you fund it? Okay, returns, how do you get it? Because see, now what happens, since funding and capital structure is unanimous, the construction guy cannot take any decision on his own. He has to abide by the other person. Otherwise, other person will stop the construction. The moment you start getting into, you want to have a gold plate over that road, decision is yours whether to have a gold plate or silver plate on the road. Then what the other guy can do? If he is not willing, stop it. See to it that you don't get any loan. Then where you will put the construction? You have understood the crux of this. How do you, suppose if you are R and I am S, my work will start only after you construct. You can play with me, no? How? By inflating, because you are having a hold over construction. By putting a poor quality of material, you can play with me. You can make a, because what happen if you put a poor quality of the material, entire burden will come on me for next 30 years now. So should I sit and watch you what you're doing? No, I can control that. I can stop that. Yes, how? Financing decision. See to it that you will not get any funds. And the moment you don't get any funds, you have to listen to me to carry on the construction. Followed, no? That's why you call it a joint arrangement. So now learn, practice at home how to write this. See, one thing is going to the root and understanding why do we classify it. In this case, you have to evaluate the decisions over the relevant activity. Construction and operations, both are significant activities. But they are held unilaterally by S and R. That's why if you would have set up two different companies for one phase and the other phase, during construction, then again we have to evaluate what exactly that are. Can I go and stop it? In construction, I am an NCI, but can I go and stop? If answer is yes, then that RS construction, both are my joint arrangements only. So construction, I can do independently, but here joint operations. So funding and they are highly significant. We can actually take control over the activity. That's why it's a joint arrangement. Now, this is the only question on whether it is a joint arrangement or not. Now we will see whether joint operation or joint venture. For which, what we need to do? We have to evaluate certain conditions. First, is it a separate vehicle entity? Is it solely dependent? Who is using the output? You remember those conditions? Those conditions we have to evaluate. Now, two parties structure a joint arrangement called entity A. That means it's a separate legal entity. Each of has got 50% interest. The purpose is to manufacture material required by the parties on their own individual manufacturing processes. Maybe some battery, I saw Nokia and Samsung. The arrangement ensures that the parties operate the facilities that produces the material quality specifications of the party, legal form of the entity, which activities are initially indicate that the assets and liabilities are entity A, are assets and liabilities of entity A only. That means they have got a separate legal existence. Your assets are not their assets and his assets. The contractual arrangement between the party do not specify that the parties have got rights to the asset. That means very clear. That means the legal status itself gives that net assets to the parties. Even there is no overriding contracts telling, okay, that fan for you. Following are the other relevant factors. The parties agreed to purchase all the output in the 50-50 ratio. A cannot sell any of the output to the third parties unless both the parties to agree. Because the purpose of the arrangement is to provide the output, right? So tomorrow that entity A cannot say, I am independent, I will sell you to the third parties. The price of the output sold is set up. Now who is going to set this out price? Set up by the parties only. That means you cannot independently fix the price and make the profits there. On the basis of the operating model. Now, whether it is an operation or a venture. Venture? Yes, Vidya. What is your opinion? Dhanush? It's the operation. Yes, Kriti. Nice question, no? Yeah, okay. Net assets. Yes, what is your opinion? Venture? Yeah. India? Mm. Mm. Joint venture. You have got different opinion. Huh? Joint operation. Okay. Anyhow, okay. See, first thing, what we should try to see it, that joint venture, see which one standard gives highest importance, that people, they don't want to classify it as that, which is the balance is they even see, like what I mean to say here is, standard no easily tells, okay, if this joint operation or a joint venture, which is the, if you want to classify it as say operation or venture, which takes multiple tests. After all tests, it is a joint venture or joint operation. Which one? Joint venture. See, again, framing of question was little, I was finding it difficult. See, if you have got a joint operation here, joint venture, classification of joint operation is a very easy stuff. At every point of time they said, if not this, joint operation, if not this, joint operation, if not. That means if you want to classify something as a joint venture, it has to go after multiple tests. The very first test is separate entity. If not separate entity, it can never ever become a joint venture. It is joint operation. Followed, no? That means if it is a separate venture, is it a separate what is it called? If it is a separate entity, is it a joint venture? No, standard still says. That means see, standard is giving importance to joint venture. It says that it will not allow you to easily classify something as a joint venture. You cannot fool people around by having a contract and all. They say that first condition you have to check legal thing. Second condition you have to check about the contracts overriding the legal thing. And the third condition you have to check, is that legal entity independent? If answer is no, it is joint operations. In this condition, it will fail the third test. That means it is not independent, no. It has to just listen. Okay, so we'll see that. That's what, if you see the second question, will your conclusion differ if entity A can sell output to the third parties? Yes, now it is a joint venture. Why? Because it has got authority now. It is independent. In the first case, the third trust it will fail. So the legal form is the first one, indicate whether it is a joint venture, always. But you have to verify other relevant facts also. Okay, indicate the parties have to purchase all the output of the entity. So this indicates it is a joint operation. The third condition fails. Followed, no? Now, what if the change? If the parties change the term and entity A is able to sell to third party also, yes, then it would have been classified as a joint venture. Perfect. Yes. Now, this is one beautiful question in exam. This is why I am given this, because something this is very similar to this particular illustration question. Nice question. You tell me, identify whether what type of arrangement it is. X and Y manufacturing similar type of mobile phones, something similar to the previous question. They use their own assets. Under the terms of arrangement, X and Y are to use their own assets to manufacture. Both are responsible for the liability to their respective. That means if I have purchased an asset and that asset has got a liability, I am responsible for it. We'll both bring, manufacture and take out the output. The arrangement lays on the distribution of the revenue expenses. X Limited has got exclusive control over marketing and distribution functions and does not require the consent of Y Limited in this aspect. No separate entity is created for the arrangement. It is a joint operation. What is the joint arrangement? Is it a joint arrangement? But you have got exclusive control over marketing and distribution, no? If you see here, the arrangement lays down, are they using this mobile phone as an input? Say they are similar type of mobile phone from a joint arrangement to manufacture and sell. That means they are, this is not like previous one. That means you manufacture a battery, give the battery to me. I will manufacture a mobile phone and sell to the third party. Not like that. They will manufacture the mobile phone itself and they will sell the mobile phone. X and Y are manufacturing similar type of mobile phone from a joint arrangement, form a joint arrangement. That means something similar type of mobile phone means Samsung and Nokia. Both will manufacture similar. They form a joint arrangement to manufacture and sell mobile phone. Means one particular type of mobile phone, no, neither independently they will not manufacture and sell. Both will form a joint venture to manufacture and sell. Say for example, Android phone. You know Nokia failed. Why? Why Nokia failed? Because they didn't adopted Android. Why they didn't adopted Android? Because they thought that if they adopt Android, their business will fail. See, they didn't want to take the risk. What you can do? See, taking risk is a risk. Not taking risk is also a risk. People say it is a bigger risk actually. Not taking risk is a bigger risk. So what they may do, see the beautiful idea behind it. When you appreciate this, then you understand it. That is called understanding of the business. What smartness they did, no. They wanted to test how it works. And both were afraid to adopt that technology in their existing technology. But they also know that if they don't do it, some competitor will do and they will not be there. So they don't want to venture independently into say smartphone business. Instead, both of them, X and Y, formed one smartphone company. Now that company's job, and see, it's a different brand, different company. We don't know. Outside people don't know. It's not even Nokia, it's not even Samsung. It's something, some third party. Say Apple, in the brand of Apple, something it has come. New phone has come. Followed, no? Or Oppo or something has come. We didn't know. Do people know that Oppo belongs to Nokia or Oppo belongs to Samsung? They don't know. Now, what happens? how this manufacture should happen? X and Y Limited to use their own assets to manufacture the mobile phone, and both are responsible for liability related to their mobile phone. The arrangement lays down the distribution of the revenue, and the exclusive control over marketing and distribution functions does not require consent of Y. That means entire marketing is taken over by X. Now tell me what it is. Still joint arrangement? Now, if this X Limited messes up in, he takes faulty decisions in the marketing, what can happen? Which is the most relevant activity here? Manufacturing mobile is relevant activity or marketing mobile is relevant activity? Among that, see, okay, it's again matter of assumption and perspective. But if we assume, and why they have to give me separately that marketing and distribution function? And one more thing, if you observe, both X and Y manufacture similar type of mobile phone. That means even the Y says, okay, Y shouts, I will not help you with my machine. What X can say? go hell with it. If you don't bring your asset, since I am also manufacturing asset something like you, I will bring my machinery only to manufacture. That means manufacture and marketing, if we say, do we have a unanimous consent there? No. That means it's not a joint arrangement only, no. Now, what it is, let us not talk about. In reality, this question somebody might have faced, they must have asked ICI what it is now. Because ICI, there is something called the TCFG, India's task group something. They will suggest this type of thing when we face a real life situation. Followed, no? Now, they may have to acquire it as like a subsidiary. And one is an NCI there. God knows what type of arrangement it is, but it is not a joint arrangement. We cannot treat it as a joint arrangement. Continuing with above, what would be the classification of the joint arrangement if X and Y jointly control all the relevant activities of the joint arrangement, including marketing and distribution function? Now, what is your opinion? See, first of all, I will tell you my opinion. It is not joint arrangement. Why? Because marketing is taken over by X. They say that, look, that is also taken over by both. And it is actually jointly controlled. In all aspects, it is jointly controlled. Then what is the classification? Joint operation. Very good. Clear? Everyone clear? Now, what is the classification of the arrangement? Is the terms of the arrangement if you create a separate entity? Joint operation. Why? Because assets and liabilities, you are responsible. No. How that type of, even though you have created an entity, how that type of things possible? Entity should be net asset basis. Now, continuing with these three, that means you created a separate vehicle. The joint arrangement is means of manufacturing mobile phones on a common platform, but the output is entirely purchased by 50-50. The joint arrangement cannot sell output to the third parties. And the price set by both the parties to cover the production. Then joint operation. What would be your answer if X and Y can sell their output to the third party? Then what is entity? No, entity, say continuing with 4 means entity can sell only to this party. Joint operation, because it is irrelevant whom the joint operators are going to sell. Question is what that joint operation, whether they can sell or no. That's the question. And the last one, in this, the contractual terms were modified that the joint entities also can sell it to the third parties. It's a joint venture. That means if entity can sell it to the third party, it's joint venture. So first you tell the story. So there should be rights to the assets and obligation, rights to the net assets, then it is a joint venture. So in the first case, okay, it will fail the definition of a joint arrangement because it is marketing and distribution is one of the important decision for relevant activity. Otherwise, you don't get the cash. And other person cannot stop you from doing something or not doing from something. That's why it is not a joint arrangement. Second, where the ex and both jointly control, it is a joint operation because they have got a share of assets and liability. You don't have any entity. Third question, they say separate vehicle. Question is very silent about the terms and condition. Then you say that it is either operation or venture. So if the contractual terms give the rights to the assets and liability, just like what they have told in one, is operation. But if the contractual say net assets, this is a venture. Because question is very silent for the third question, what is their distribution share? And the rights are not clear. Other facts to be considered. So if we can primarily distribute the product to the entities, only source of cash flows are these people, entities and all. So since they have to exclusively give to X and Y, it is a joint operation, and it is doesn't make any difference whether the joint operators can sell to the third party or not. But the question is whether the joint operation can sell to the third party. That is the question you need to evaluate. So in this question also, it is a joint operation. And the last case, when all these tests pass, I hope by this question you should be very clear. Very nice question. When all these tests pass, then you can classify it as a joint venture. You must be very curious now, then how the joint operation accounting is going to happen. No, see again, they may ask you, the chances of that is very less. I say remote. Okay, in our Index 37, 37, they have given one classification. Any probability of less than 5% is remote. They say ignore it. 50%, up to 50% contingent. Above 50% probable. Followed, no? My observation that type of one twist, no, it's a very remote. Even though it comes, the impact is 1 mark. You take a judgment. Say, if you feel that 90% of the question you can answer very well, confidently, and you know sure shot that particular answer, attempt it. Don't look that 100% only in that first 1.5 hours I have to answer. 10% you take a risk, no? Take risk and see that things will move in, fall in place. Okay, next question. Previous question is clear. Entity K owned by 3 institutional investors, M and C, 40, 40, 20. Now, what is that K? A contractual arrangement between M Limited and N Limited gives them joint control over relevant activities of K. Oh, 2 people take the control. So, any decision about this company has to happen between decision of M and N. It is determined that the entity K is a joint operation and not joint venture. Understood? So whatever test you had to do, no, that they only did, and they said that this is an operation. Means all the 3 parties are the operators now, M and C. Out of M and C, M and N has got a joint control. The other party doesn't have a joint control, but he is a party to the joint operation. C Limited is not a party to the arrangement between M and N. That means he is not a joint controlling it. Like M and N, C Limited also has got a right to the assets and obligation to the liabilities. That means he also must have given some gas stove or something. But a unanimous decision, he is not a party. It is not a unanimous decision between 3 parties. Unanimous decision between 2 parties only. Now, what would be the manner of accounting to be followed by M and N on one hand? Tell me. Their assets, their liability, their share of asset, their share of liability, their share of income, like 111. Now question comes, what should be the accounting done by C on the other hand in respect of entity K? Same or different? Same, exact. This is what you need to say, that when the party is not a joint operator, but is a party to the joint operation. He is not a joint operator. Sorry, he is a joint operator, but he doesn't have a joint control. Then he should account it the way a joint operators will account. You have to explain in the light of relevant provisions. So first you explain, joint operator will recognize assets, liabilities, share, all those things. They have to account such assets, liability as per respective index. Further, a party who has got a right but does not have a joint control also should account as per above provisions. So C should account as per 111 only. Easy? Yes. I think the last question, it may be a 4-mark question probably. A Limited is one of the parties to the joint operation holding 60% interest in the joint operation. I told you, 60, 40 and all doesn't matter. And balance 40 is held by the other operator. But it's a joint operation. A Limited contributed an asset held by it to the joint operation for the activities to be conducted by the operation. Like I had an asset, my asset had a book value. That asset only I give it to the operation. Now go back to the journal entries what we discussed. But don't write the entries what I told. That is only for our understanding purpose. Let us see what institute is telling. The carrying value of the asset is 100. So if in our language journal entry 2 ppe how much? 100. But it was sold for 80. PPE, JOPP how much? 80 into 60%. My share of PP comes back to me, no, out of 80, 48, not 48, 48. Okay, so what is that another entry? So I made a loss of 20. Okay, so how the loss should be accounted for sale of asset to the joint operation? Which one? Loss only to the extent of other joint operator. Okay, so now my PP goes from my books is 100. Okay, so accounting entry will be, I'm going to get a cash also, no? Bank account debit how much? 80. Okay, so I have got it. And sorry? No, my share comes 40%. So PP net goes 40. Anyhow, we will see that. We will see the journal entry rather than discussing like this. Then we will compare. Don't worry. I will give you a good clarity. A Limited had a record now. You have made a loss, right? How much is your loss? 20. Bank account debit, 2 PP, 2 loss. Bank account debit, loss account debit. This. Out of this, how much is loss belonging to the other party? 8 rupees. 20 rupees into 40%. Your portion is 12. You should not recognize your portion. Okay. So you should record the share of the asset at a 60 rupees. So what goes out 2 PP is only 40. Because your asset is with you only, no? Or if I have to explain in my entry, if you want to make 2 PP, you say 100. JOPP, you say 60. Because you cannot record your share. Now, bank you get how much? Not 60, 80, but out of that, what is that called? 60% is your, like 32. Wait. No, I sell this. A contributed an asset. Yeah. There is no bank here because I didn't get the cash. No, I just contributed an asset. I didn't sell that asset. So it is not a bank. It is just a joint operation. That means other party. Joint operation means other party. So how much other party I am going to debit? I cannot debit him 40 rupees because it is sold at a loss. So it is debited at a 32. So loss 8. So what institute is doing? They are doing PP they cancel and they say joint operation, that means other party, loss 8 to 40. Are you clear about this journal entry? Perfect, no, everyone? Yeah, but going forward, just focus on this. Don't talk about these entries because this is only I gave. Otherwise, it is very difficult to understand this particular journal entry. What is the logic of this? Now, okay, one more ulta case. A Limited is the parties to a joint operation holding 60%. A purchased an asset from the joint operation. In their value, it was 100 rupees at 80, 20 rupees loss. How the loss should be accounted for? Now you cannot take your share of asset. A limited should not record the share of the loss until the resold to the third party. Joint operation has sold the asset at 80 by incurring loss of 20. Hence, A limited should record an asset at 92 rupees only. Purchase price of 80 rupees plus A limited loss of 12. No, because for loss is for whom? Joint operation, no? See, no, see, joint operation book value is 100 and you got that at 80 rupees. So, what goes out? Okay, we'll see the journal entry. I'll explain you with the journal entry. From the joint operation, last time we contributed to the joint operation, we didn't get cash. This time I paid a cash and purchased from the joint operation. So further, while accounting the interest in the joint operation, you should not record any share of loss incurred for sale of transaction with the joint operation. So accounting entry will be machined to bank. Okay, in our language, what is the journal entry? See, I already had a JOPP. So first of all, PP comes how much? 80. Okay, what goes out? JOPP goes. How much my JOPP was there? 160 goes out. Because 100 was their book value. In that my share was 60. 100 into 60%. So 60 goes out. So what comes to me is I pay the bank also, right? How much cash do I pay? Did I say? But yeah, cash they didn't say. That means I have to debit to the joint operation now. Credit to the joint operation. So, to joint operations or say bank or operator, did I pay 40? No, something must have. Yeah, JOPP is 60. PP 92. Yeah, because I am going to recognize yeah, my share of loss. Sorry. No, tell me again. No, 1 minute. I also just missed this. Yeah. Okay. So I get a PP at how much? Yeah, I get actually 100, but 100 in that 8 loss of other parties 8. So 92 because I cannot consider my own loss, no. In 100, when I get 100 worth of asset, in that 12 is my loss. So I cannot consider it as my only loss and I reduce it 92 and the JO operator other party 48. Okay, so now if I take these two net, it comes to 32. If I take these two net, JO, because this is 32. Okay, bank or JO. 80 into, that's what it is. other person shares. Yeah, this is we can also say that 80 into 40% other person shares. That applied to the because since asset was in our books, we are incurring a loss, and that's why we show loss separately. Other party, here we don't show any loss as such, because when we buy, amount is this thing 40% of directly other party, but we don't show it as a loss because we are purchasing. When we purchase, we don't show it as a loss, only when we sell. Anyhow, again, not required to go that much deeper. So you are clear about this, no? So, and possibilities are very low, because till now these questions have not come for exam. Just to show that, okay, if it all comes, it may come for 4 marks. So with this, the theory part is complete.